Thanks very much, Tim, and welcome everyone to this webinar. If we could move to the next slide, that'd be great. Firstly, I'd like to start with a bit of an overview on Knosys. So Knosys is a software as a service company. By this, I mean we develop software applications, we then host them in the cloud, and fundamentally we charge our customers a subscription in order to access that application that we are hosting. Now, we run a portfolio of solutions and they are very much directed towards connecting people and information. So from that, I mean that we have three solutions in our portfolio. One is a knowledge management, the other is a employee intranet, and the third is a library management solution. And I'll talk a little bit further about them deeper in the presentation. But I'd like, if we move to the next slide, thanks. I'd like to start off with really just an overview of the business from a financial point of view, because I know that's of keen interest to most investors. If we look at Knosys, its FY22 results, we had an operating revenue of 8.9 million. That's up 94% on the previous year. So we fundamentally doubled our operating revenue throughout FY22, which was quite an achievement given that part of that year was during COVID. Of that 8.9, 8.3 of that revenue is recurring revenue. And that grew by 120% compared to the previous year. And that's what you expect from a SaaS-based business such as ours. We've also, on this chart, showed what our annual recurring revenue looks like as of the end of October 22, and we're projecting that we're somewhere in the order of 9.6 million. So as you can see, we're continuing to grow our recurring revenue and obviously our operating revenue. In any SaaS business, it's very much based upon a very high gross margin, and we're currently averaging 87%. And we've managed to maintain that level for a number of years. In terms of our cash flow and our cash position, the business had a cash outflow of only 220,000 for the FY22 year, and we had an adjusted operating loss of 1.1 million. And I'd add that that 1.1 was particularly driven by our investment in additional sales and marketing and investments in some of our growth initiatives, which I'll talk to a little later on. On the left-hand side, you will see a representation of our recurring revenue over the lifetime of the business. And as you can see, we're achieving a compound annual growth of over 41%. And particularly the last couple of years, we've really started to gain traction and see a significant improvement in that. Now that chart also shows the contributions from each of our SaaS solutions, blue representing knowledge management, green representing employee intranet, and the purple representing our library management system. So I'd like to talk to you a little bit more about the solutions. Next slide, please. Just to give you a feel of what it is that we do. So the first solution is our knowledge management platform. Basically, this is a software that assists agents and employees who operate within call centers, contact centers, or service desks. Generally what it is, it provides the agent with the right answers to give to customers, or it steps an agent or an employee through a process. And this is all about maintaining consistency and governance within that particular business operations. Of recent times, we've seen the knowledge management platform be used as a single source of truth. And by that, I mean it fundamentally delivers answers, information, processes to a company's digital channels. They may have a chatbot that they've installed, or they have a web portal that they want their customers to come through. When they're searching, looking for material, in fact, what they're doing is being served up information from our KN platform. The second offering we have to the market in SaaS is employee intranet. Now, think of this as just a digital workstation that an employee opens up when they come into work, and all the information they need to do their job is presented to them. It links out to applications that they need day to day. It enables them to communicate, engage and interact with fellow employees. And so it's very much targeted at employees, productivity and well-being. The third offering we have is our library management solution. This is very much targeted at public libraries, specialty libraries, and some academic libraries. Now, this solution not only automates the internal processes within the library and the library business, but of recent times has focused more and more on digital assets, how we provide those assets to members, how we share information assets between a group of libraries so that we get, every library doesn't have the same collection. Next slide, please. So what does that mean from our point of view? Now, Knosys is implementing a very detailed and specific SaaS vertical strategy. We're doing this because what we want to do is identify the verticals that have a true business critical need for that solution. And as you can see from this slide, we have 4 verticals that we operate within. And you'll notice that in the majority of cases, in that vertical, we have 1 or 2 of our solutions being sold into it. The one on the left, the first one, is our health and healthcare vertical. Now within that, the employee intranet, the knowledge management solution is sold, and we have customers like HealthScope and Health Direct as key customers in that segment. Banking financial services, that's where we started our business. Once again, the employee intranet and the knowledge management is used by those organisations to better service their customers and to look after the well-being of their employees. The third vertical is retail. In this space, it's very much about providing employees with information, latest specials, what's happening with products, communicating with your employee base that is very distributed. And the knowledge management side is all about managing customers who ring up and are making queries in terms of products, offerings, and things of that nature. And that's quite a growing vertical for us. And the fourth vertical is government. Now, this is our largest vertical. We sell library management to well over 100 council libraries, and we also sell the knowledge management platform into service organisations such as Service TAS, Service SA. These are organisations that are designed to provide a single entry point for people to query, ask questions, apply for over the internet via web applications. So all these solutions have very common principles, and that's one of the reasons they sit very well together. They are first intelligent search. How do we make it easy for people to find the right information first time? Governance, in terms of how an organisation publishes information and how it tracks the use of that information. Personalisation, really important these days. You only want to deliver the information that is required by that individual, be that individual an employee or be that individual a customer. And the fourth one is security. Obviously, we spend a lot of time making sure that our solutions are very secure in the cloud to offer that assurance to our customers. And as we've said in multiple announcements, we operate a shared services model. By this, what I mean is that we have standardized our practices in terms of how we deliver a solution to a customer. And that goes from the commercial contracts, that goes from the project services, customer support, customer success. So across all these solutions, we have the one or various teams operating in the same way, and that provides efficiencies for us as an organisation. Next slide, please. So just to give you a view of our customers, we have a very much a global customer base. Within this, you'll see very well-known brands within Australia. As such, we have 340 customers at the moment, and of that, 11% are enterprise customers. That is people with over 1,000 users of the particular solution, and we have 89% mid-market customers. On the left, you'll see the weighting on industry verticals. As you would expect, government is the largest vertical. Obviously, financial services is another large one, as is health, which is growing. And obviously, as we go forward, retail is another growth segment for us. Next slide, please. So in terms of Knosys, now Knosys has been around for approximately 6 years. During that time, we've expanded globally. We have 5 offices around the world. We have 380,000 users of our solutions, and we're active and operating in over 10 plus countries. I think it's also important to note that we have over 20% of our revenue is derived outside of Australia as we continue to expand our operations. Next slide, please. So in terms of where our future direction of Knosys, and particularly in this interesting times, we have 3 main areas that we're focused on in terms of growing. One is product and market fit. What we mean by this is we continue to invest within the 3 solutions to increase their value proposition, as this drives retention and also gives us a better chance and opportunity to bring more customers on board. We also focus on go-to-market, and we have invested, as I mentioned previously, last year significantly in sales and marketing, and we continue to do that in FY23, but very focused on health, retail, government and banking sectors. So we've narrowed our focus during FY23. We're also now looking at partner opportunities and looking at the potential for sales channels to expand and accelerate our new business line. And the third area is operational leverage. We are very focused on the bottom line for the business, and we have started programs to consolidate our operations, become more efficient. We started this by onshoring our Indian operation back to Australia. We've also now just started common software components that can be shared across the 3 solutions. And we're very much focused on allowing our customers to self-serve more. So that means that they can, through video assets, through learning systems, self-train, answer their own questions, which alleviates the need on us from a resource point of view. Next slide, please. So in terms of the FY23 outlook, we're targeting over 10% organic growth across our geographies. And as you saw at the first slide, we're currently sitting at about 16%. So we think over the year that we should be doing quite well. We've got a strong pipeline of large commercial contracts that we hope to execute upon during the second half of this financial year. And we are also very focused on our operational leverage and making sure that the rise in our revenues exceeds any cost base that we have at any particular time. And we're also expecting FY23 to once again be a very cash flow break-even position, if not positive. And finally, we've got favourable industry trends at the moment. The hybrid working model is very much paramount, particularly for our employee intranet and also our knowledge management as people come through contact centres and want more face-to-face activities. Next slide, thanks. This is really just a summary of where we are. We only have a small number of shares on issue, 216 million. Currently, we have an enterprise value of 15.4, and we do have some major shareholders, but we have a quite extensive retail holder. And as per Gary's comments, we think ourselves quite undervalued given our recurring revenue levels, and we certainly look forward to a re-rating of the stock as we go forward into FY23 and the following year. So I'll leave it at that for the moment, Tim. Any questions?
Thanks, John. Yeah, a couple of questions, quite a few actually. You recently announced Singtel, Optus and ANZ contract renewals. Are they spending more on an AR basis, or have you put through some price increases?
Yes, we've, at the conclusion of the initial contracts, we also go through a negotiation process, and we have increased the value that we derive from those customers.
And sorry, there's another question here. Can you comment on your kind of acquisitions in terms of Green Orbit and Libero, whether there's been any negatives and what are the positives?
Yeah, look, certainly any acquisition, anyone who says acquisitions are easy probably have never done one or two as we did. And I think it's important for people to realise we did those acquisitions during COVID as such. So the upshot of it is Green Orbit, the acquisition has gone really well. We've increased the revenue from that business. We've added probably close to $1 million of additional ARR from the Green Orbit acquisition, which has been really good. We went through a very detailed program of customer engagement and also investment in the product that we continue to do. The Libero is obviously the later acquisition, and that too, we're going through a similar process of engaging with the customers, looking upsell in terms of increasing the pricing, but more importantly, we're very focused on changing any 12-month arrangements to multi-years. So we have a big focus on commercial renewals being 2, 3, or 5 years, because that really solidifies the customer base, helps with retention, and gives us upside for the future.
And John, I was reading during the week, venture capital in the US is piling into employee monitoring and measuring productivity. Would that be a vertical you'd consider from an M&A perspective?
Look, it certainly is. A lot of our solutions, particularly if you look at knowledge management, the employee intranet, and even the library system, core to those solutions are, productivity, be it making the employer be able to handle more calls quicker, frontline banking officer to be able to do their work more efficiently, a library being able to manage more assets and help customers. So that is an area that is core to the value proposition of the solutions. And it's certainly an area we see with regards to analytics, how we provide more information to those businesses so they can manage their employees better. And that certainly is an area of interest for us.
It certainly is where the money is in a really troublesome market. So thanks, John. That's all we have time for. Enjoy your weekend. There's about 5 or 6 questions online, if you don't mind, if you've got time to answer them. Otherwise, I'll shoot them through over the weekend.
Thank you very much, Tim.
Thanks, John.